Namaskar, good evening. Today we will take a look at prospering bank, small bank but prospering bank, Federal Bank Limited. Miss Gracie Koshi is the chairperson. Mr. Shyam Srinivasan is the managing director and CEO. First we will take a look at the latest results to a certain extent. First, interest earned. Interest on advances bar bills 4,089.55 crores in Q4, 3,849.86 in Q3, 2,961.5 in Q4 last year. So, year-on-year improvement is 38%. Quarter-on-quarter improvement is 6%, reasonably good. Income on investment 775.61 crores in Q4, 717.85 crores in Q3, 588.21 crores in Q4 of last year. Income on investment also has increased by 31.86% year-on-year and 8% quarter-on-quarter. The other ones are small. Other income is 768.42 crores in Q4, 565 crores in Q3, 484 crores in Q4 last year, an improvement of about 59% year-on-year and 36% quarter-on-quarter. Interest expended is the major expenditure always for all banks. That is 2,938 crores in Q4, 2,585 crores in Q3, 2,029.95 crores in Q4 last year. So, interest expended has gone up by 44.71%, more than proportionately it has gone up year on year, and quarter on quarter also 13.64% up, that also more than proportionate. The other items of expenditures are rather small. Operating profit is 1,394 crores in Q4, 1,348 crores in Q3, 862 crores in Q4 last year. So there is an improvement of 62% year on year and 3.4% quarter on quarter. Provisions have come down quarter on quarter from 214 crores in Q3 to 125 crores in Q4. That's a good decline in provisions. But compared to Q4 of last year, that was 84 crores. From there it has gone up by gone up to 125 crores, which is 49% year on year, and but quarter on quarter it is down by 41%. Profit after tax is 939.6 crores Q4, 852 crores Q3, 582 crores Q4 of last year. So, profit after tax, that is net profit, has gone up by 62% year on year and 10% quarter on quarter. Equity is 423 crores. EPS is 4.51 compared to 3.99 in previous quarter and 2.79% in Q4 of last year. 61.65% improvement year on year, 13% improvement quarter on quarter. Now let us look at gross and net NPA percentages. 2.35% gross NPA in Q4, 2.42% in Q3, that is a little down, 2.89, that's good. Gross NPAs have come down from 2.42 to 2.35. Year ago it was 2.78, from there it has come down to 2.35, that is 15.5% down. Net NPA percentage, if you come to that, so it is 0.73, it has come down from 0.77% quarter on quarter, and it has come down from 0.98% year on year. Year-on-year reduction is 25.5%. Quarter-on-quarter reduction is 5.2%. Both are very good. So NPAs have come down. Return on assets is improving. Last year it was 0.27, now it is 0.36. Year-on-year growth is 33% and quarter-on-quarter growth is 6%. Now capital adequacy ratio, that's also important. Capital adequacy ratio is going up steadily. It is now 14.81%. Previous quarter it was 13.35%. So it's reasonably good. It may go further also. In the debt to asset ratio is 7.42% in the Q4. Earlier it was 7.86% and last year it was 6.97%. So debt to ratio, assets ratio is somewhat comfortable. Operating margin 24.47% in Q4, 25.65% in Q3. Net profit margin is 16.55% in Q4 and 16.18% in Q3. So it's okay. The board of directors have recommended a dividend of 50%, that is rupees 1 on a face value of rupees 2 for the year to 2022-23, 50%. Casa ratio, that is the only disquieting factor in the otherwise wonderful results. Casa ratio has come down to 32.68% in Q4, slipped from 36.94% in Q4 of last year. It has been slipping steadily in the last 5 quarters, but that is only in percentage terms. In absolute terms, it has been going up. In absolute terms, it has been going up. Percentage terms, it has come down from 36.94 in Q4 last year to 32.68% in the current Q4. So the management has to look at this Casa ratio also. Now we will see the other factors. Market price is 127.75%, 52-week range is 82.5 low and high is 143.4. It is somewhere in the middle. Not near the lower end, but near to the higher end. Volumes are very good, so buying and selling is good. Now if you look at the strengths, trailing 12 months EPS growth is good. Return on equity has been improving in the last 2 years. Revenue has been increasing every quarter for the past 4 quarters. Book value is improving for the last 2 years. FIIs, FPIs and institutions are increasing their shareholding. It is very near to 52-week high. But the last traded price is less than support 3. Decline in net profit with falling profit margin quarter on quarter. Quarter on quarter there is a fall. Decline in net profit and with falling profit margin year on year. Declining net cash flow. That is, see, current quarter it has gone up. So let us see. Profit after tax has got, see, we were talking about the previous quarter. Now profit after tax in Q4 this year is 935.57 compared to previous quarter 852 and 581 in Q4 of last year. So net profit margin has not fallen. Cash flow, it has to focus a little attention. Volumes are good. Brokers have upgraded their recommendation or target price in the last 3 months. Overall results are good. The only disquieting factor is that of the Casa, current account and savings account deposits. That should go up in percentage terms also significantly. The bank should concentrate on that. Now if you see the brokers, etc., brokers have upgraded their recommendation or target price in the last 3 months. NPAs have come down, provisions have come down. It is a mid-range performer. Small bank becoming a mid-range bank. Stock with medium financial performance, average price momentum and average valuation. Price earning is around 9.66, something like that. Price to book is 1.37. Okay, face value is 2. Dividend is 1. 50%. Market cap is 27,000. It is becoming a mid-range bank. Dividend yield 1.41. 20 days average volumes are 10 million. Book value per share is 92.96. Analyst ratings based on 22 analysts is buy. 82% people feel it is a good buy. It is outperform 9% of the people feel. Hold 9%. Underperform nobody. Sell nobody. But all said financial performance is not very great. Not very great. Medium. But it is improving. The price is 10.91% away from 52-week high, 54.85% away from 52-week low. So there is a short build-up in it. Piotrowski score is 4, indicates weak financials only, not great financials, but it is improving. The industry comparison, market cap is much below industry median. All the banks are growing very fast. Federal Bank also is growing, but not that fast. PEG ratio is high, that is good. Profit growth is there, but it is somewhat low. Shareholding pattern, mutual funds have increased their shareholding from 32.8 to 33.99. Mutual fund schemes also 38 to 39 in the latest quarter. FIIs have decreased their holding from 27.72 to 26.94. Overall it is okay. Institutional investors have also increased their holding from 70 to 70.08 to 70.73. Price performance, it was not a great multibagger at any time. In 3 years it was a multibagger, but in 1 year hardly 35% only. So on the date of results, despite good results, it has fallen by 9%, something like that. And that people are ascribing to Q4 Casa ratio, which has come down. It is the lowest in the last 5 quarters. Bank has to address that. Of course, only percentage terms it is lowest, as we have seen. It's not lowest as per the absolute numbers. Loan growth is good, but low Casa. So overall, what do you say about Federal Bank? It's a growing bank. It is making its moves slowly, steadily, thoroughly. Loan book is growing, deposits are growing, everything is growing. Profits are growing, operating profits are growing, net profits are growing, everything is growing except Casa. Casa percentage terms, it has fallen. NPAs are okay. NPAs, there is no problem. Asset quality is reasonably good. Therefore, Federal Bank is a good bank, a growing bank. Thank you for listening. So for any bank, some small issue will be there, but Casa is not a major issue. Still 32% is good, but based on that, it is said to have fallen by 9% in the last session. It did not have fallen. That's my personal opinion. Thank you for listening. I will be back with you with another very good company. Thank you.